All right, let's go. Let's go oil. Let's go oil. We're going to do a video on this real quick. Okay, what we established, make this lower right there. What we established this morning was this. When you first log in, you have to determine the first thing is if you are in a chop market or you are in a trend market. The market can only do two things. It can go vertical in a trend market, or it can go chop or range in a flat market. And the easy way to decide that is look at this 5-minute chart, the magenta moving average. Don't look at anything else. Don't look at these charts over to the left, and don't look at your entry chart, 89 tick. This 5-minute chart is the key to your success. So we have to establish a bias right when you log in. I don't care where the market profile levels are. I don't care where anything's at. I just want to know what my bias is. Am I in a range or chop market? We established this morning when I logged in and told you guys we're going to slight bias down on crude oil. Why? Because the angle of that magenta is key for my success. If it is angled down, I'm only taking shorts. I will not take longs at all. If the moving average is crossed down with it, you got conviction that that is a bias down market. There's only two setups we can possibly do on a number one, number two trade in a down market. Here they are. Number one, down, if the market's in a downtrend, number one, we short HVA, first test with 89 tick reversal bar. So that's the number one thing we're going to do right there. We're going to short the first test of LVA right there. Okay, HVA was right at 71 over here, my bottom left volume chart, 72 on my main chart right here. We have my hedge fund at 75. We had the previous high day at 75. So we knew if the market would have rallied up to my number one over here, between 72 and 75, we look for a red reversal bar, and we look to get short. But what happens if the market's too weak? It will never get to a number one in a downtrend. So what do? If a number one is not going to work, I said we look for a number two breakdown at 45. Why? Number two says we short LVA with symmetry dot two-thirds candle close. So if the market's too weak for a number one trade to happen, right? I said the moving average is crossed down. You must have two things on a number two trade. You must have the moving average crossed in your direction. Never happened like that on gold on that HVA short this morning. Remember that caught that high? That's why you short it, right? So the moving average must be crossed down. And then what? Once it comes down to LVA, what do you look at? You stare at your symmetry dots. Once I get a two-thirds candle close below my symmetry dots, what do? There's your entry to the exact bar right here. There's your exact bar. Two-thirds body candle close. The wicks don't count. These little wicks do not count. I want a two-thirds body candle close. The reason I use symmetry dots in number two trade is I'm trying to catch the wrongly positioned traders. The wrongly positioned traders are right here. They're just below my symmetry dots and my LVA on a number two trade. If we are slightly biased down or in a downtrend, angled down, and the moving average is crossed down, that means the order flow of the wrongly positioned traders are just below my symmetry dots. That's where the stops are resting, right below it. Okay, so once they get through these stops, you get a big move. You can see the resting stop orders were right here. They were taking a lot of them out right exactly there. Look at that consolidation. That's where all the resting stops were. Right? So once we get through those resting stops, we get big speed in the market. That's why the number two works with order flow. So the bottom line is what you're going to do as traders, you get in this 5-minute chart, and just like this number two that I set you up with this morning, I said either sell number one at 72.75 or take a number two breakdown at 45. There's only two possible scenarios, guys, all day long. Number one, number two, number one, number two, number one, number two. Then after you break a number two, you can look for a number three. What's a number three? Number three is a retest of order flow right here. Number three will be back up. And this is the rhythm of the market. It's worked all in 2012, all in 2011 in the trading room. It's going to do the same. We'll do the same setups all in 2013, 14, 15, 16, as long as we can go, because this is the rhythm of the market. It catches traders that are wrongly positioned in the market, and that's why we do what we do. But you got to have discipline and patience to wait for the number 1 and number 2 trade. The number 3 trade I call a scrap trade because, yes, it's a trade setup, and you still want to take it if it lines up with confluence. That's your guts right here. I mean, that's your main meat to the trade, and on my number 2. Because that's where the order flow is. You're catching all the wrongly positioned traders right here. And you know they're wrongly positioned because they got rejected. If you see prices that get rejected, that's usually a high volume or low volume node in the market, meaning that is an area that's been respected by either a high frequency trader, an algorithm, a bank, a hedge fund, or some type of professional money is really looking at that level. So if it gets rejected against trend, that's an important level to look at by itself. And that's without even market profile. Well, we use it with market profile. The symmetry dots on number 2 have to line up with here, which is 1 tick. It's 45, this is 44. Okay? And all of a sudden, you oil traders, again, can be done by 9:30 in the morning. You can be done by the New York Open, typically 2 to 3 out of 5 days of the week. But you got to get on my number 1 and number 2 setups from 7:45 and jump on the trades. Right? Jump on the trades when they come up. Okay?